Okay, good afternoon, traders. Good afternoon. My name is Raul Rivera. I am the founder of the marketprofile.com. Today is Tuesday, August 15th, 2017. Let's get started with today's daily market summary. So, really slow trading session today as I look at the volume in the S&P 500. We literally just made it over a million contracts. That wasn't the case um, until just recently. It looks like a little bit of volume did come in towards the end of the session. A million contracts on very low volatility. We're back to the VIX under 12. It looks like it's only down 2.8%. 1198 is the final read here after 4 p.m. Eastern time. And today we just had quite the snoozer of a day. We did have a few good trades. We also had a couple of trades that didn't work out all that well. And let's start with reviewing those. So first off, we got the S&P 500 futures. And when we take a look at the profile view, we were really looking to get long and get short the market. We have enough reference points, few value areas at the highs. We were looking to sell 77 to 80. I've tried to sell this area in the past many times and never got filled. There was always resistance at 75, but here we are again trying the short at 77 to 80. We knew early this morning that sometimes it just takes a bit of time to, not a bit of time, but it takes an early trade to get into the S&P 500. So we had a small order here of two contracts between 63 half and 62 half. I did get filled on those, and but that was the just in case type of play. I wasn't really looking to gain some stellar profits in this trade. I was trying to get the high of the day if I could, which happened to be about 10 points on just two contracts, which isn't too much, about $1,000. But of course, that wasn't to be. Actually, we'll show you why in the next in the profile view. Excuse me, in the hybrid view. But we were looking to get in early. We did get in early, but the idea was really to get long 55 to 53. That's where we had the bulk of our orders. That's where I had at least 5 contracts to the long side. I had about 7 to go short. As you can see, the blue levels were not filled. Market never traded through them, but we did get a fill on the pink level. And the reason I marked it pink was because I literally only wanted to get long that area small. It was a level in the market profile that had been tested before. So we were only looking to try it small as a just in case type of measure, in case the market makes retest the lows of the day and then trades higher, rather than trading lower and then pivoting off of a value area. So looking at the hybrid view, we can see there were more sellers than buyers today. Negative 10,000, almost 11,000 in balance, 50 lots and greater were trading to the downside as well. They were mostly short for today. Of course, that doesn't matter when we have low volatility. We have buyers down here and sellers, and the market just slows down. It doesn't want to go anywhere seemingly. We do have news tomorrow. At 8:30 we have building permits. At 10:30 a.m. Eastern time, of course, the crude oil inventory, and then the big one at 2 p.m., which isn't really going to be that big. Remember, for some reason, economic news does not affect the U.S. economy anymore, right? What do normal people look as a measure of the economy? They look at the stock market. They look at the S&P 500. They look at the Dow. Economic reports come out like the one from early this morning. We had core retail sales month over month for the month of July. The number, very good for the economy. But U.S. indices, or the the index that we look towards measuring the economy is pretty much unchanged. Why is that? I don't know. It's just something that's happened to the market where it doesn't care about economic news anymore. So at 8:30 tomorrow, like I said, we have building permits. At 10:30, the EIA crude oil inventory report, and then at 2 p.m. is the somewhat big one, which is the uh, FOMC minutes. Okay, so it's not really a meeting. It's just the notes and the statement from the previous meeting, and which we know what they're going to say. I mean, the narrative has been the same all year long, and the narrative has been that we're going to gradually raise interest rates. And I mean, it's become so easy to read. We all know that they're going to raise interest rates in September. So, the party continues. The U.S. indices are not going to do anything. And if anything, they're going to continue to grind higher every single day by the smallest of margins, because now that volatility has come back down to a normal level, we're not going to get these types of days in the S&P. How you see here, we traded like 30 points on, and then the day prior, we rallied from 24.31 to as high as 40, almost 50, 46. So we're not going to see these kinds of days anymore. Now we're going back to these tight trading ranges since volatility has come back down. If we're going to get more volatility, the market has to sell, and that's the way it's panned out for now. So here in the S&P 500, I did take a trade long right on this first bar, 2 contracts. It was good enough for at least 3 points on the trade. We were looking for possibly taking the highs of the day, moving back up, but unfortunately, what happened was that the market just continued to stay sideways for the rest of the day. So I took a very, very small loser on this one for 1.25 points on 2 contracts. Literally only came out to $125 loss in the S&P 500, and then for the rest of the day, waited for a long down here that never happened. So very, it's tough to trade a market like this one. You'd rather just go out and enjoy the summer rather than wait for these markets to finally trade. Looking at crude, more sellers than buyers today. We can see that negative 1,200 imbalance overall, but I'm not looking at this number. I'm looking at this number. So this number down here is the 20 lots and greater, and we can see that they were selling every chance that they could today. Looks like roughly almost negative 2,000 imbalance. And simply what this means is that the institutions are selling crude oil, meanwhile the rest of the market might be just consolidating. Most of the volume did take place at the lows, very little at the highs. This one, we were only looking to be more short than long, and we were looking to short 80 to 90, and then 35 to 45. 35 to 45. Of course, the market couldn't trade any higher, which matches the idea that we wanted to be sellers. We knew that the market moving to the upside would be pretty difficult, and thus selling at the highs makes more sense in the fact that you're almost at the high of the day, right? The extreme. When we listen into market profile theory, right? Market profile, volume profile, it's all about bell-shaped curves, right? And one of the examples I like to give to people is a real life example of TrueCar.com. If you go on TrueCar.com and you check a car in your area, doesn't matter what car, you're gonna see a distribution curve, right? Or a bell-shaped curve of prices that are well below value, above value, and that are inside of value. And as a buyer, we want to be long below value because we're getting quite the steal, and as a seller, we want to be short above value simply because as the seller of the vehicle, I'm making the most amount of money, and in between is where the true value lies, right? This is where the buyers and the sellers make their business. So the idea is always to be long below value and short above value. And thus, today we really just traded mostly inside of value. We can see that prices below value did revert back at the end of the day, and then prices above value, which there really wasn't much, that also did trade back into value. So the idea that volume and time distribute through a mean throughout a period, or uh, distribute through a mean over a period of time, is true. So we were looking to be sellers, and at the highs, that was definitely the place to sell it. Those were the unfair highs and the unfair, the extremes. So in crude oil, I took a trade here. I'll show you my fill. Where is it? Data series, text and markers. Very small trade. I shorted one contract at 47.50, and the idea was that the market could possibly trend to the downside since it was already selling. Early this morning, we took a look at the profile and we determined that we had a B-shaped distribution. B-shaped distribution is a trending down pattern. We were looking to sell it. So 47.50 happened to be TWAP, which is this red line here. So 47.50 short. The market, the trade worked for maybe 12 ticks max. So it seems as though that around this time, this period, they weren't really looking to sell crude oil, and thus the market continued higher. I added one more at 59, trying to bring down my cost average so I could break even, but that's always a risky venture. I ended up taking a loss here of 6 ticks for 47 at 47.61, which literally with just 2 contracts, it's only $120 loss on this trade. Okay, so losing in the S&P, losing in the crude oil market, but those thankfully were the only losing trades of the day. The other trade I had here was in gold, so taking a look at gold. The news, the economic news, the news that should affect the S&P 500, the news that we expect the economy to react to, it's the commodities that decide to react, and not only the commodities, but the currency futures as well. So looking at gold, B-shaped distribution from the very beginning. We knew we wanted to be sellers of the market, so we can see here that's where we opened. Here's where we closed. The characteristics of a B-shaped distribution is that the larger bulk of distribution be well below the open of the distribution. We can see that we opened here, closed here. Larger bulk of distribution is under the open, so that's a B-shaped distribution. Okay, it's a negatively skewed normal distribution. So in this one, we were looking to buy value, but also sell the trend. So looking at it from this view, we were definitely trending lower, and we wanted to be sellers at VWAP and TWAP. There you can see TWAP was the absolute best place to sell it, as the market did come back down. And TWAP is, usually the better place to sell it. A lot of trading platforms always have VWAP, but they never have TWAP. TWAP I had to program into this market profile, just simply because VWAP, you could literally find that everywhere. But TWAP is actually the better choice. TWAP has been more reactive to, prices have been more reactive to TWAP than they have to VWAP. And the difference is the average that we're looking at. So when we're looking at a VWAP, we're actually looking at an average price of volume. And when we're looking at TWAP, we're actually looking at an average price of time, which is something that not a lot of people talk about, but it's very, very useful. when trading the market profile, and it's become really really reactive. Even here on this day, on we yesterday we traded above VWAP, but held TWAP and then traded lower from there. So TWAP really really useful portion of our software, especially when markets are trending. But we were looking to get long value. So we located value here between 74.5 and 73.5, so about 1 point's worth of value. But of course, the news this morning, it was good for the economy, so it's bad for gold, right? If there's a demand for the economy, it means that there's a demand for the US dollar, and there is no demand for gold, right? We're no longer with the gold standards. Things been demolished over years and years and years ago. But that's always going to be the reaction. If it's something good for the economy, it's always going to be bad for gold and good for the dollar. So gold did sell off, and it did hit this value. So second day in a row here. Yesterday, I myself and traders in the room, we caught the very high in crude oil and made over 75 ticks on that trade. And here today in gold, we caught the absolute low of the day, and I myself took 40 ticks on this trade. I know some members of the room also were able to take some profits. I literally only did one contract because, again, just the speculative notion. The news did hit the market when we got filled, so you got to be smart. How am I supposed to know that the market isn't going to continue trending to the downside forever, right? So you got to understand how to take risk, and that's what makes a great trader, understanding how to take risk. So early this morning, I would have probably gotten long a lot more if we didn't have news, but of course we had news, so I got to take that into account and deleverage my risk. So I only took one contract here, and I was looking to actually add more at this level here between 70 and 68. Looking at value, we located it here plus another profile here in the past. Got long at 73.70, got out at 77.70 for a total of 40 ticks or 4 points on the trade. And as you can see, only on one contract, able to make $400, which is a lot more than I lost in the S&P 500 and the crude oil market combined. And this is what I talk about all the time: maximizing your profits and minimizing your losses. This is how you make money. You could have days where you lose more trades than you win, but as long as those trades remain, as long as those losers are small and your winners are big, you're always gonna end up winning. But today, with the market profile, we always have more winners than losers. At least 80 to 90% of the time. What really gets you is how to manage these positions after the entry has happened, and that's probably the toughest thing to teach to traders. But we get it done in the room, and here, trade of the day happens to be in gold. I also took a trade here in the 30-year, but this one's kind of boring. Took a trade here at VWAP. We were extending the range, so I was looking to get short right there at VWAP. I did get short. I added to my position, and then I closed it for break even, so I never really lost anything, only commissions. But here again, we were trying to get long at value. Okay, this was the area we determined to be value, 20 to 24. The market came and touched 24. I had one contract sitting at 22, pretty much calling the low of the day here, but not getting a fill because I was just 2 ticks better than the market. It happens. It happens every now and again. So, but as you can see, this one would have been a great trade. We only got down here at the 9 a.m. hour and then traded as high as, let's see, as high as 23. So from 24 almost as high as 23, gaining close to 1 point profit here. in the 30-year. One point in the 30-year on one contract is about $1,000. So could have been a pretty fantastic trade had I gotten a fill. And then finally, the other trade I did get long happened to be in the currency markets, which was here in the yen. So let me show you my fills on this one. I don't necessarily trade currency futures all that much, but when I do, I try to make the best of it. Let's look at it in profile view. And as you can see, I got long two contracts, one here at 90,460 and then 90,400, and then ended up selling my position out at 90,460, which brought me 6 ticks of profit when you calculate that the average cost. I hate all these decimals in currency futures, I really do, but you know, it's what you got to deal with, I guess. But same idea here, finding value, locating value based on the market profile. Here we found a value area from a singular distribution profile. We decided to get long there. It happens to be the absolute low of the day. Okay, and we do this a lot. I mean, we call the low of the day in gold, the low of the day in the 30-year. We were pretty accurate in determining the low of the day here in the S&P and in the yen. So I mean, 4 different markets calling the absolute low of the day. It's something tough. If I didn't have the market profile and I was literally just looking at candlesticks, and I want you guys to ask yourselves this question, okay? And I don't want you to look at this in hindsight, okay? Let me just maximize this here. As soon as you guys saw this big bar selling lower, okay, would you really have wanted to get long the market? Ask yourself that. Without market profile, without me telling you, here's where value is located in the market, would you really have wanted to get long the market at that moment? The answer at that moment is probably no, right? It's probably no. A lot of traders will say, oh my God, the market's really selling off here. I'm probably going to get short, or I'm not going to do anything. With the market profile, I knew this is the area to get long. I got long, and the trade worked. In fact, it worked better than, it worked as I expected it, but of course, I didn't have much patience on this trade, so I took it off fairly quickly, but I got long right here on the news. Because we were on a B-shaped distribution and extending the range lower, we were looking to get out of this long trade at VWAP, which happened right here. About 1, 2, 3, 4, 5 times you could have gotten out of the trade. And from VWAP, as you can see, it decided to pull back lower. So these levels are interesting, and they're important, especially on trending days. So this was my trade here in the yen, literally 6 ticks on 2 contracts, came out to about 75 bucks. Okay, not the biggest profit in the world, but $75 in literally less than 1 hour. You know, it's a good hourly rate, right? $75 in less than 1 hour is a good rate per hour, of course. But we only took one trade, so it took 1 hour's worth of work here. So. That was the trade in the yen, and the euro was a little bit more overextended than the yen, so we weren't really looking to take a long or a short in the euro. Anyways, guys, I'd like to invite you all to the trading room. Come check me out. See me trade these levels. Call these levels out in front of you live, real time, every single morning. And also watch me manage these trades. All you have to do is come by to the website, www.themarketprofile.com, and claim your 14-day free trial of the Market Profile trading room. Also, if you like this video, make sure you guys go ahead and click like. And if you have any questions on Market Profile or the order flow footprint or any of the indicators or my trading strategy and methodology, please feel free to comment on this video, and I will answer those questions personally. I want to thank everybody for coming by. I hope everybody has a great rest of your night, and let's get ready for tomorrow. Thanks, guys.